Germany has officially slipped into recession after recording its worst economic slump on record in the second quarter. Consumer spending, business investment and foreign trade have collapsed during the coronavirus pandemic.
The GDP numbers for the second quarter of 2020 are worse than expected, but to be honest, we didn't expect an economic beauty contest anyway. We may have structural deficits and may not be innovative enough in terms of digitalization, but this is corona. We had lockdowns and that meant we just couldn't be active economically.
GDP shrank 11.7% year-on-year between March and June, after a 2% contraction in the first quarter. That's far bigger than the slump at the height of the global financial crisis in 2008. The unemployment rate rose 1 percentage point to 6.3% in July. That's compared to a rate of around 5% before the virus hit.
We currently have 2.91 million unemployed. This is 57,000 more than in June and 635,000 more than this time last year. This means that 1 in every 5 unemployed person in Germany is unemployed because of corona.
Chancellor Angela Merkel's coalition government last month agreed on a $153 billion stimulus package. It hopes the money will help Europe's biggest economy return to growth. Berlin expects GDP to rebound and expand 5.2% in 2021, after shrinking more than 6% this year. But concern over a renewed spike in COVID-19 cases is growing. Germany on Thursday recorded 839 new infections. It's the highest number in about 6 weeks and is believed to be partly fueled by summer travel. So far, Germany has weathered the coronavirus crisis better than many of its neighbours. But as an export powerhouse, it's vulnerable to any resurgence of the virus at home and for its trading partners. Sibel Karkus, TRT World.
Well, for more on the state of the German economy, let's bring in Ulrich Leuchtmann. He's the head of FX research at Commerzbank in Frankfurt. Welcome back to the program, Ulrich. Now, the German economy, the headline figure is 10.1%, a decline in the second quarter, but on an annual basis, it's actually 34.7%, which roughly matches what the US has been reporting. It's a record for Germany, as we know. How bad are these figures in your view?
Well, first of all, this is something which is completely different than a normal recession. No, a normal recession tells us economists and tells everybody that something is wrong with the economy before that recession. And therefore, you have a recession for the economy to adapt, to bridge those gaps and to heal those deficits. This is something which is completely different now, because we had this shutdown, which was health policy induced, which had to be because of coronavirus. And therefore, this does not tell us very much about the strength or the weakness of the German economy before the coronavirus hit. Therefore, this is something which cannot be compared to past recession. Having said that, the numbers also show that the high-frequency numbers, like daily traffic numbers, etc., show that economic activity has shut down nearly completely in March and April, but from late April on it's improving. And therefore, we have seen the trough already. And even if we would stay at current levels, Q3 would be much better than the average of Q2, which was so much influenced by this very bad March and April number.
Yes, and as you say, the worst of it happened in the month of March, with the recovery happening quickly in the months after. The so-called V-shaped recovery is currently underway. Do you think it'll continue in Germany?
Well, I think, yeah, we have seen this kind of V-shaped recovery. But I think from now on, we'll see that the speed of recovery will slow down massively. We are already also seeing this in those high-frequency numbers. And I think, therefore, yeah, the worst GDP number certainly is behind us, but what we'll see is further pressure on the labor market, etc. Therefore, yeah, the worst is behind us, but the recovery will be so slow that it will still feel quite painful.
But as we heard in Sibel's story there, parts of Germany are seeing a resurgence in coronavirus cases. In some instances, those states are also reimposing some lockdown measures. Will that affect the economic recovery significantly?
Sure, it will affect the economic recovery. But the point is, these measures are more sensible now than they have been in March and April, where nobody knew how to deal with this virus, and these lockdowns were nationwide, were in some cases lockdowns which in retrospect have been not very effective. Therefore now we are seeing new lockdowns here and there, but they will be locally contained everywhere where we have local spread of coronavirus. They will be more targeted towards containing those cases. And therefore, I think the economic damage that they will impose will be less severe than what we have seen in March and April.
Okay, and as we know, the German economy is heavily reliant on its exports, and therefore the economy is tightly intertwined with global supply chains and foreign demand. Now, we know many countries around the world are still struggling with the coronavirus outbreak. Do you expect that the lack of demand or a reduced demand for German exports will hurt the German economy going forward?
Yeah, exactly. Exactly. This is the reason why we expect that the recovery from now on will be quite slow. Because what we are seeing is that global demand is shrinking, and therefore demand for German exports is shrinking. And therefore, this is something where, take the US, take parts of Asia, where the recovery and the demand for German exports will not come back to the level we have seen before Corona for quite a while. And therefore, it will take a long time before the German economy really recovers from this, despite the fact that the epidemic itself is much more under control than it has been in March.
Okay, Ulrich Leuchtmann from Commerzbank, thank you so much again for joining us on the program.